All right. It looks like people are attaching. So greetings from Chapel Hill, this beautiful spring day. It's Mark Yusko from home office here in Chapel Hill. And we're going to do around the world speed version as usual with a little 1984 theme. War is peace. The Ministry of Truth tells investors to party like it's 1999. So on the left, you've got the peace talks that are on again, off again, on again, off again, off again, and on again just today, like since I made the slides. So kind of crazy. And then Taco Man will deliver. We'll talk about that here in a little bit. So a couple quotes from George Orwell: "War is peace, freedom is slavery, ignorance is strength. The Ministry of Peace concerns itself with war, the Ministry of Truth with lies, the Ministry of Love with torture, and the Ministry of Plenty with starvation. These contradictions are not accidental, nor do they result from ordinary hypocrisy. They are deliberate exercises in doublethink. Those who control the present control the past, and those who control the past control the future." This is important. The past was alterable. The past never had been altered. Oceania was at war with East Asia. Oceania had always been at war with East Asia. Can substitute some names there and it sounds interesting. We know that no one ever seizes power with the intention of relinquishing it. So, deja vu. It was kind of fun. I got to read this book in 1984 when I was in college. So it was kind of fun. So, we started the world with Around the World. Started Around the World with the 10 surprises. Little did I know that picking Top Gun to be the theme was going to have a lot of implications, both with war and the 40th anniversary, which we'll get to in a little bit. AI bubble, Fed chair, credit, geopolitics, investors' biggest fears were really geopolitics. And the normal color of the headline is dark green. That means it's new. A light green one means it's old. You've seen it before. So we won't spend as much time on it. The Economist cover was spooky. From the World Cup kind of coming up to this idea of global unrest, symbols of chaos, war, missiles, tanks. It's almost like it's, programming, right? So how it started, we talked last time about, those two really are cowboys, the global market impact of the Iran conflict. Why, yes, they are. We had said in January, before this started, that the problem was that it's possible that the two cowboys buzzed the Iran tower too closely. War ensues and oil prices soar. Well, that's kind of what happened. So the airstrikes begun on 2/28. Trump declared war, even though technically only Congress can declare war, but he said it. Israel and the U.S. painted this picture of Iranian aggression, even though we bombed them. But it's kind of the double think. Largest intermediate impact on the global economy is basically the flow of oil, but not just oil, all kinds of things. And we'll get to that through the Strait of Hormuz. Vast majority of Hormuz oil doesn't come to the U.S., doesn't go to Europe. It goes to Asia. And interestingly, Iran is not attacking all the ships that are trying to get through there, just the ones that aren't going to the places they want. And China actually, in theory, saw this coming in that they stockpiled a ton of Iranian oil before the missiles started flying. So after barely a week, Trump gave his equivalent of mission accomplished. He said this, very complete, pretty much, which I still don't really know what that means. Iran literally that day struck a number of fuel depots and boats. So it wasn't mission accomplished, nor was it over. The problem for the president and the party is this conflict, unlike pretty much all the other conflicts, not popular. This is less popular than Libya. And so his advisors are saying, you better find a way out or we are going to get absolutely clobbered, not only in midterms, but in the presidential election in 28. So Since we were together last time on the Ides of March, March 22nd, Trump threatened to obliterate, he always speaks big, all the power plants. And then he tacoed 5 days later and did a ceasefire. So on March 31st, China and Pakistan, let's just let that sink in for a second. So China and Pakistan are trying to intervene on behalf of the world and draw up a peace plan. And Pakistan offered to host peace talks, which we kind of agreed to, although it wasn't formal agreement. But then on April 7th, things got totally surreal. I mean, I read this on the evening of the 7th, and I was like, this can't be real. I mean, it can't be real that a seated president says a whole civilization will die tonight, never to be brought back again. And look, I don't really care about George Clooney, but he did say, that's a war crime. I don't know if it is or isn't, but it isn't normal to say stuff like that. Now, thankfully, cooler heads prevailed, and the next day they announced a 2-week ceasefire, suspending Trump's threat to annihilate Iran. And Iran actually submitted a 10-point proposal to the U.S. via Pakistan saying, if you do these 10 things, then, we'll call it off. So oil prices had surged on the threat. So you can see since the beginning of the conflict, oil prices had gone from, $60 all the way up to a peak of 120 when Trump was saying, it'll be over in 2 to 3 weeks. And then he declares a 2-week ceasefire, so it's not going to be over. And then he declares the blockade of the blockade, and oil was stubbornly stuck at 95. Now, it did crash, right, from 120 down to 95. That is a very large move. In fact, it was the largest downward move in dollars, and that's just the law of large numbers, in history. So April 9th, the betting odds surged to 59% that this thing would all be over by April. Now we're almost to the end of April, and almost to the end, 2/3, 3/4 of the way. 3 days later, though, the odds had dropped to 17%. So probably not going to be done in April. April 10th, we sent in the big guns to the peace talks. Vice President was going to go. And then 3 days later, nope, no talks, no JD. And in fact, we're going to blockade the blockade, which if it's kind of funny. It's like, how do you open a strait by blockading it? It is, again, surreal. So April 15th, tax day, Trump said, this will be over soon. And I find it funny, the betting odds were only 76% that it would be over by the 15th, on the 15th. And I guess that's why people make so much money in these, gambling markets, call them prediction markets. That clearly wasn't going to happen. So could have made a lot of money on that bet. And they declared a ceasefire for another week until Earth Day yesterday. So the night before Earth Day, Trump extended the ceasefire indefinitely. But the problem is the strait is still closed. So yes, there's a ceasefire, but the main problem, which is goods and trade aren't flowing, is issue. And so commodity prices are soaring like it's 1973. And it's not just energy. I mean, it's bad, like jet fuel up 60+%, and it's scarce, and places like Switzerland are canceling flights, and summer travel plans are getting dicey, and airline costs are going up. But it's more than that. There's fertilizer prices are rising rapidly, and there is the risk, and I'm not saying this is going to happen, but there's meaningful risk of global food shortages, and kind of an outcome that if you extrapolate a couple of the trends, because all these ships are stranded in the Gulf, there are some places that could experience far worse situations than global lockdowns in 2020. So yesterday, Trump presses the blockade and says, I have it totally blockaded. And extends the ceasefire, but then fires. So then we fire on 2 ships and Iran fires back. So how does ceasefire even have any meaning anymore? It doesn't. It's doublespeak. So from shots fired to the peace plan to the whole civilization will die, war is peace. Now, what's amazing about this chart is we're in the middle of a war. We have potentially, and again, I don't want to be too dramatic, but humanitarian crises potentials. Doesn't mean we're going to have it, but potential with food challenges. And yet markets are up. I mean, not all markets. I mean, gold is taking it on the chin, down double digits. But, NASDAQ's up 8% and the S&P's up 3%. Bonds are down a little bit. And then Bitcoin, no one would have said Bitcoin was going to be the best performer out of this whole period. All right, so back to, again, I didn't know that the theme was going to be war, but I'll fire when I'm goddamn good and ready. Was a line from Top Gun. Surprise in 26 would be that the admiral makes a pilot change and the new guy crashes the plane. So Kevin Warsh is going to replace Jerome. Now, if you went back and you looked at Q4 estimates for GDP, you could have driven a truck through them, right? Consensus was 1%, this left-hand side, and Atlanta Fed was at over 5.5%. We came in at 0.5, the red star. I mean, that's a horrible outcome. And so all this promised productivity increase vaporized, didn't happen. Now, the Wall Street prognosticators were calling for continued expansion and 3% growth this year. That is just not going to happen, just mathematically impossible. When job growth falls to the levels that we have seen in recent months, recession has followed, not 90%, not 95%, literally 100% of the time. When Fed cuts rates, recessions always follow, and it's historically bad for markets, which is why they're cutting rates. Recession odds actually jumped, now only to 34% in early March, but then, Trump tacoed and they started falling. Now, this is a total chart crime to start the axis at 20%. So it looks like a big drop. I mean, it's really not 36 to 30, but it is a drop. Atlanta Fed slashed Q1 from, over 3% in early March down to almost 1%. IMF, nope, they're sticking with their guns. They're saying, everything's gonna be fine. It's all gonna be fine in the second half. It's actually not, but okay. The March CPI comes in hot. And this is now fueling this stagflation kind of double pump inflation, 1973, 74 embargo scenario. And, energy up 11%, gasoline up 40+%. That's a big problem for politicians if gasoline prices stay high. This is real. And once inflation gets in the pipeline, it doesn't go away easily. Now, this inflation surge shot down the Nifty 50's second wave. So the Nifty 50 in 1968 was the first time we had crazy markets at crazy multiples. And then we had a crash. And then we had this, kind of bailout where we printed a bunch of money and, went off the gold standard and it looked like everything was going great. And then the embargo. And again, it doesn't mean that this is exactly the same, but it's eerily similar. I mean, eerily similar. So in theory, the U.S. economy is less vulnerable to oil shocks. Well, yes, we consume less oil, but I mean, we are less dependent on oil because we're less industrial and we're more consumer, but we consume a lot of stuff made from oil, but that's a whole nother point. But the consumer is less sure, and that's because this increase in gas prices more than offsets, in fact, doubly offsets, almost triple, the amount that everybody thought they were going to get in tax refunds. So we were going to get a record $1.4 trillion in tax refunds. And the consumer was going to get a bunch of that, but now that's all been wiped out by gas prices. So Fed watchers were saying, okay, there's no way they're going to cut interest rates this year, given inflation. Rate cut odds are collapsing since the war began, down from 75% to 22%. And, the admiral basically says, you're fired. Now, he's said you're fired about Jerome a bunch of times. Turns out he can't actually fire him. And Jerome said he's not leaving. So, he's called him everything from incompetent to, a bunch of other stuff. But I guess he says he's fired. And on April 29th, he will have to vacate his office. But okay. So if I can't shoot the son of a bitch, let's at least have some fun with him. Surprise is that funding costs spiral out of control and long rates reach Mach 10. Money supply growth is back, growing it at 5%. It's a little lower than the craziness of 20, 21, 22, but it's still bad. And the Fed, even though they say they're not doing QE, is doing QE. Their balance sheet is expanding again. Government fiscal stimulus is insane. I mean, $1.8 trillion, rivaling the largest ever. And the national debt, has more than doubled in the last 15 years. It's a scary number. 39 trillion is a scary number. Total global debt is actually even scarier. I mean, we're talking $111 trillion of debt that will never be repaid. So it's all going to have to be inflated away. So bond yields, when the attack happened, were like, oh shit, this is bad. Bond yields spiraled out of control. They were heading toward, Mach 2, and now we have peace. So Ministry of Truth said we're going to have peace, and peace it is, even though, again, on again, off again, and in the 10 hours since I made this slide, or whatever it was, they just canceled the peace talk. So we'll see. Corporate credit spreads were lowest ever. So what do companies do? They issue bonds. Well, when companies issue bonds, because they're spending a lot of money building a lot of, I think, redundant data centers, investors actually respond by issuing credit default swaps, because they don't think these guys can pay it back. Hyperscalers' free cash flow on the right-hand side is gone. I mean, their bond vigilantes are saying they're calling their bluff, because they see this circularity of it's the same handful of companies passing the same $1 trillion around. It doesn't actually create growth or economic activity, or for that matter, profits or, stock value. So is private credit this cycle subprime? Well, we talked about this last time. It doesn't have to be. It's similar size, right? At around, $1.5 trillion. You could say it's not as levered and sliced and diced, but it's kind of levered. Now the banks closed their doors to try to avoid the bank runs, basically saying you can't withdraw your money out of these funds, but the horse was kind of already out of the barn. So private credit defaults have risen, markdowns came fast, so investors are like, hell to the no, I'm out. Shadow banks were in free fall. Oh, hey, but then we got peace. So in the last 3 weeks, straight up, like everything else. Okay. Banks and financials, they were looking ugly. In fact, they were the worst sector in 2026. Then peace. All good. So one particular company looked like the canary in the coal mine, giving off AIG vibes. That was Oracle. 500% debt to GDP, debt to equity. Oracle lost $500 billion of market cap. So they just borrowed a bunch more money. Now, who would lend them money if they're already 5 times overlevered? I don't understand. I guess it's a big club and I'm not in it. But, I love this headline. Oracle's building yesterday's data centers with tomorrow's debt, because their technology is not even really cutting edge. And their free cash flow has vaporized, and yet somehow they magically beat earnings. Well, It's like the old joke about the guy interviewing the accountant. He asked the first candidate, what's 2 plus 2? And they say 4. Says, okay, thank you very much. Yes. Second person, what's 2 plus 2? Says 4. Thank you very much. Yes. Third person, was 2 plus 2? And they say, what number do you want it to be? You're hired. So what did they do? They just changed CFOs. So they didn't like the number they were getting, so they changed CFOs. I'm not saying anybody is cooking the books here, but usually when a CFO changes, that's a red flag. Here, the market actually liked it a lot. Or maybe they just liked the fact that they laid off 30,000 people to pay one person, a bunch of money. So despite your best efforts, you refuse to die. The bear market might be alive and well, and go Mach 2 with his hair on fire, equities crash and burn. A bullish sentiment coming into the year had pretty much almost never been higher. Everyone thought the market was going up. The only time they thought it was going up more was, yeah, you guessed it, back in 2000. But Uncle Warren was the only one who didn't agree, and he was piling into cash, the most cash he'd ever had, and he was underperforming the S&P by the largest amount he has ever underperformed the S&P. Just kind of weird. Individuals also maybe didn't believe it. So contrary to the rhetoric that retail is buying, they were actually buying a lot of cash. Now, this is really boomers. Boomers, because I'm a boomer, quote unquote, say don't buy green bananas and they don't buy equities, they buy bonds. Now, we own a lot of equities in our 401ks and 403bs, but generally speaking, as you get older, and Rob Arnott has written extensively on this, older people like bonds and cash, so they buy a lot of it. So it's not surprising to see that. U.S. equities were not liking the conflict when we were together last time. They were worried about oil prices, but Ministry of Truth said the record straight. See what I did there? Ha, ha, ha. War is peace. Markets party like it's 1999. I mean, those are vertical. Those are Maverick going vertical, straight into the sun. It's amazing. Now, it's a little strange that consumer sentiment and pessimism on finances have actually never been worse. That should say worse, not lower, because one is low, one is high. So it should say worse. Sorry about that. But, consumer sentiment never lower, like never, not in the University of Michigan survey ever. And their concern about their financial condition is the worst it's ever been. So that's crazy. War is peace. Prices go up. Bulls trample bears. Greed is good. Who needs hedges? So in the past 3 weeks, guess what? Bulls trampled the bears. We're back to greed, almost extreme greed. And the divergence between puts and calls has, again, never been higher. So no one is hedging. Everybody is long and strong as the market goes up. It makes new all-time highs. Institutional investors actually think stocks look cheaper and are buying calls. I mean, institutions probably shouldn't be speculating in options. Remember, 85% of options expire worthless, but I think that's a bad idea, but who knows? Now, the 2000 analog has been discussed for a while. I showed you this last time. I mean, the similarities are striking. And if you look deeply at this chart, there's a lot of things that look very, very similar. Where have I seen this movie before? Oh, yeah. In 2000. That's some pretty fancy flying. So, we made the similar bottoms and the parabolic move up, and we're months away from potentially being the top. Now, on the lighter side, it is the 40th anniversary of Top Gun, and you can go see both movies back to back in the theaters on May 13th. It should have been May 9th, but that's not when it came out. My birthday's May 9th, but would have been a nice birthday present. Dow is right back to its 125-year trend line. You know what happens next. Again, you can say, well, it doesn't have to do that. The fact that it happened in 1899 and again in 1906 and again in 1929 and again in 2001 and again in 2020. I mean, it's possible. This time could be different. Not likely, but possible. This one, this is, I love the parabola actually trends backwards. Now, clearly a graph can't go backwards. It's just kind of funny that if you fit the parabola, it looks like it's going back. So back in time, the DeLorean here, but the only other time this has ever happened in history is 2000. Now, when you compare the S&P to M2, that removes the monetary noise, because if you think about it, yes, the S&P is at an all-time high in nominal terms, but it's actually the same price as the early 90s in terms of M2. And so in the dot-com bubble, we got exactly to this level of price to M2. And it was the same story, right? The internet changes everything. This time AI changes everything. So it doesn't have to happen, but I actually think it's probably gonna. It's also interesting that exactly, like almost to the day that Bitcoin was born, was the trough of this number, where equities had gotten pummeled during the global financial crisis, and M2 had to start. QE had to start 3 months later in March. So it's very interesting. So look, the U.S. equities overvalued on every measure. Will this cycle end the same? It was likely to end the same. U.S. stocks never now been this overvalued. And you can say, well, it's been this way for a while. So yeah, it's worse than 2000 and worse by a lot. I mean, the Buffett indicator at 2.26. I mean, the Buffett indicator should be 0.7, right? Because it costs money to make money. I guess you could make an argument that 1-to-1 is fine, but over 2 is stupid, and 2.26 is beyond stupid. Q ratio, same. Shiller PE, second only to 2000, and every other measure of PE is worse than 2000. Institutional investors, though, were betting that volatility had been eradicated forever coming into this year. The VIX actually wasn't even confirming the all-time highs. VVIX, anytime it goes above 100, it's a red flag, and basically said mid-February we'd have a problem. February it was. VIX jumped higher. Now, what's interesting is when VIX is, below 12, something bad is going to happen. When it's in that green zone, 12 to 14 or 14 to 17, basically nothing bad will ever happen, or nothing bad is happening. When it gets into that 17 to 23 zone, the orange zone, it's basically saying something bad could happen. When it jumps over 23, it means something bad is happening. But anytime it's over 30, it's already happened. I mean, old adages become old adages for a reason. I mean, VIX it worked like clockwork. I mean, literally to the day of when we were looking at this chart was the day to buy. I'm sorry, 2 weeks later was the day to buy. When VIX got to 30, which it did, right the day of the announcement of China-Pakistan peace talks, and it's been straight up ever since. So now we're back to that zone where something bad might happen. Now, if it compresses from 19 down to sub 15, I'd get very worried. So earnings growth, finally, for the first time in a number of years, contributing to most of the S&P growth as opposed to multiple expansion. The problem is when you get earnings compound annual growth at 15% for 5 years, that's as good as it ever gets. It has never gotten better than that, and it goes the other way. And so we had this divergence on the right-hand side. And so the longer the conflict goes, the more negative impact on earnings. But Goldman actually extrapolates the other way. They're basically saying earnings are getting ready to surge. like, how are earnings going to surge if all your input costs are going up and you can't get finished product through different parts of the world? Import export numbers are collapsing. So I don't know, maybe I guess a couple big companies will do fine. And analysts are falling all over themselves to raise. Usually by now, they have lowered their estimates from the beginning of the year by 2%. They're actually raising them by 4 or 5%. The only other time we've seen that, shockingly, is 2000. So on the left-hand side, the gap between trailing earnings and corporate profits, so the actual money that the company gets to keep, not the accounting chicanery. There's this thing called the bezel that John Kenneth Galbraith talks about, that is the amount that's stolen through accounting chicanery. And he says that increases over time until someone calls BS, and then it gets eradicated and we go the other way. We're at an extreme of the bezel. And the right-hand side can show you that is free cash flow margins are falling because people are spending money to build these redundant data centers. And yet profit margins, quote unquote, are going up. Well, that's just accounting. It's like revenue recognition rules and accelerated depreciation rules. So one thing to remember, the third year of the presidential cycle is always the worst. Sell in May and go away works every time. I mean, not some of the time, pretty much every time. So what do you mean it doesn't look good? It doesn't get looking better than this. So the surprise would be, since everyone thinks it looks so great, that maybe it's time to pull the eject handle. So best performing stock last year was this company, SanDisk, memory chip maker. It was up 75% so far in 26. I'll show you a chart in a minute. That was, 3 weeks ago. Now it's up significantly more than that. Hedge funds were all in. The chart on the left is important to understand. It's this thing called the memory wall. And it basically says that the rate limiting factor, the choke point for LLMs is not the GPU processor, it's the memory. So memory prices were flying. And it's because you can see, if you go from, on the left-hand side, when we go from Blackwell to their next version of the chip, you have 1,000 gigabytes of memory required. And so the memory chip makers are up, 500%, 300%, 200%. And, little old SanDisk year to date is, and this number is 2 days old, it's up before this afternoon, it was up 315%. I mean, crazy. The memory is dominated by three companies, Samsung, Micron, and SK Hynix, the HBM, the high bandwidth memory. And you can see those stocks. I mean, that red line is not bad. I mean, that's a 39% move over the last 12 months, and it pales in comparison to these memory makers. We just had the most historic, it'll look like it'll end today, but never before had chip stocks rallied 16 days in a row until yesterday. The weighting in the index now is starting to get close to double what it was in 2000. Probably unsustainable. Taiwan is now bigger than the UK. There are more companies in the UK than Taiwan. Now, the one counter to all of this is the AI companies, AMD and NVIDIA and TSMC, trade at way more stupid multiples than the memory guys. So, Hynix at 4.7 and Micron at 5.4, those are not absolutely great. Now, the reason they're so much lower is because these have historically been cyclical businesses, and they probably will be cyclical again, because it's highly likely someone is going to figure out a solution to the memory wall that doesn't require memory, doing it with software or some other path. But anyway, Korean equities and SanDisk were shot down, by the Iran conflict. So they had kind of gone flat, but they came roaring back post on the right-hand side of that red line. Look, solving the AI bottlenecks is a broader theme. The question for me is it already priced in? Like, if you look at these photonic stocks on the right, I mean, we're talking hundreds of percent up to thousands of percent, 2,500% in a year. I mean, I probably wouldn't chase these companies. But I do think many of these companies are going to be very important companies for a very long time. I just probably wouldn't buy them at these levels. NVIDIA, I mean, look, that is super dramatic outperformance. Is because they do have a clear technical edge. You know, their sales are better than all of their competition. You know, they are the top hardware vendor, but it does kind of remind me of 2000. I mean, if you look at Cisco and Intel and Sun, it kind of looks pretty similar. NVIDIA's revenue growth, while it is high at 77%, it's fading. And, you know, history says that no company can keep triple-digit revenue growth forever, and these guys probably won't be the first. My guess is, you know, again, someone will out-innovate them, but just like they out-innovated Intel. But hey, peace. We got peace. So, you know, we're rallying on the far right. Now, we didn't make it all-time high, but we'll see. So even Intel, which had been left for dead for 23 years, has been soaring in the past year, but it's all multiple expansion. Their price earnings ratio went from 20 to 100. Now, do I think this company is actually competing well with these others? No, but, you know, everyone else seems to think so. Now, people were perplexed that Tesla was flat for the past year. Maybe it was overvalued. Selling at 243 times earnings makes NVIDIA at 57 look cheap. Now, Tesla reported the other day, and yes, their revenue has been flat for 3 years. Flat. No growth. And their earnings have been flat for 3 years. And their free cash flow is actually falling. So the stock actually is going down a little bit, which it should. Now, probably needs to go down a lot, but we'll see. Palantir makes Tesla look like a value stock. And Palantir did roll over. But what I hear people saying, this is crazy, they're like, well, but SpaceX is going to be worse. So Palantir trades at 72 times, 71.5 EV to EBITDA. Okay. NVIDIA is at 34. So almost twice NVIDIA. A normal company, GE Aerospace, Netflix, Meta, 7.5 to 8. That's a pretty reasonable level. I mean, it's high, but it's reasonable. 30 and 40 and 70 are dumb. But SpaceX at 1.75, which now they're saying they think they can get it higher, is 110. And I'm a little sickened by this. And I have nothing against Naval. I actually kind of admire the guy. But I'm sickened by what he's doing. And he's created this thing called USVC, which he's marketing as an SEC-registered way to invest in companies like OpenAI, Anthropic, xAI, Sierra, Crusoe, et cetera. The problem is you're paying 3% fees and no liquidity, because this is not an open-end fund. It's a closed-end fund that has a gate, kind of like, you know, one of the old funds we used to run. And so you might not get your money out when you want it. And 44% of it is sitting in cash, so you don't have any investments at low valuations. So you're not buying the innovation. You're buying these stupid valuations. And I think this is going to be a disaster, and people are going to lose a ton of money. And it's going to, as I said, it's going to be a transfer of money from the poor to the rich. So AI's impact on software showing up in the prices. This is the SaaSpocalypse. SaaS companies were getting pummeled. Look, the Ministry of Truth canceled the SaaSpocalypse. Even the software companies are bouncing on the threat of peace. So small cap beat large cap for 13 days to start the year. Small caps, though, were not a safe haven when the bombs started to drop. But man, do they squeeze harder when there's peace. So crazy. All right, the Cowboys, oil prices, 20 million barrel supply disruption. It's without historical precedent. And yet oil prices really, by and large, haven't moved very much. I mean, we went from, 60 to, I guess, 90 something, but that's not that big a move. When you look at year to date, it looks like a big move on the left-hand side. And it is the largest weekly move since the 1980s. But when you look at it relative to other geopolitical spikes, it's not close. I mean, there was one where price went up tenfold. So Trump pivots to war, oil soars. Trump says, big day for peace, oil sags. Global oil prices hinge on the strait reopening. So left-hand side, you've got, if the strait stays closed for 3 months, which we're starting to get close, oil was going to reach 160. If you got a rapid reopening, stay around 95, get a partial disruption, 100 to 130, and a prolonged blockade, which we currently have. We have a full blockade, should be 140 plus. Well, oil prices, because we said peace, and the price says strait's open, but the strait ain't open. In fact, one ship got through yesterday. One. So it's kind of weird. In fact, there are 800 ships stranded, can't move on either side of the strait. I actually feel badly imagine being the crew on these ships. How do you get more food? How do you get enough supplies? I don't know. They expected to be somewhere. The vessel traffic is basically collapsed. And yet, Trump with his kill things again. I have ordered the Navy to shoot and kill anybody. Why say kill? It's just kind of a weird word. But margin of safety in energy markets is eroding. And again, it's not just oil. Jet fuel is a major problem, particularly in Europe. They don't have enough petrol, gasoline for those who don't speak UK, diesel fuel, and crude is actually in the best shape of all of them. So the betting market said 50-50 this goes to May. I would take that bet right now. U.S. is the largest energy producer and, that's a key word, and the largest energy exporter. Maybe this was all part of the plan. The OPEC line on the right, the yellow line, that is ugly. And I don't know, maybe this is just all an asset grab, or, could it actually be, fomenting a crisis that I don't know. If you start thinking about, well, why are we doing this, and why are we blockading this strait, and why there's some strange stuff going on. Thing to remember, oil prices in real terms, there's not that high. And it only really matters if there's an oil shock when equity valuations are high. Oh yeah, equity valuations are really high. So the current oil shock is actually more like the 1970s than 2000. So this presentation about 2000. Remember in 1973, it took a while for the market to kind of grasp how bad it was. And eventually the market fell 40+%. So literally no one owns energy stocks. In fact, people are short energy. Now, this is amazing. Coming into March, we had the best winning streak, 11 straight weeks of energy stocks this century, not this year, not 10 years, this century. Then peace equals lower prices. Now we just had the second worst 3-week period in the century. So kind of wild. Oil service stocks literally were en fuego, on fire, but prices regardless keep climbing because we took capacity offline. MLPs, 12% gains so far this year and an 8% yield. Love these things. Son, your ego writing checks your body can't cash. No surprises. The dollar gets back to Top Gun. Dollar's role in global reserves has been eroding. It's now all about gold. Everybody's buying gold, particularly China, ditching their dollars. Precious metals starting to give off hyperinflation vibes. Again, not a prediction of Weimer, but when you get super high volatility of an asset, that's particularly gold, that's usually an indication of currency crisis. Everyone jumped on the debasement trade. Dollar broke out of a downtrend. It was looking great, but it doesn't like peace. Peace means less oil dominance, so less high oil prices. So if we need high oil prices because now we're an exporter, then peace is bad. Weird. Dollar downtrend were to continue, favors international markets. International markets are cheaper. International equities, particularly Asia, extending their lead over U.S. markets. Korea, Taiwan, that's chip related, but Japan, even Europe, marginally ahead of the S&P. The dollar dominance shifted in 2025. Basically, all the emerging markets started to break out. And this on the right is emerging market. Actually, on both sides, it's emerging markets relative to the S&P. And the S&P was trouncing emerging markets up until last year. Emerging markets kicked the crud out of the U.S. last year, and it's kicking the crud out of U.S. again this year. EM continues to best the S&P. It's really Brazil, but EM at 12 and the U.S. at 4. It's 3x the return, and that's despite China and India lagging. So she's lost that love and feeling. European market, look, it's bad when everybody says you're not going to grow at all. IMF basically saying, you guys stink. Last thing they needed was a rising euro. Crazy Christine did fix that. She stopped cutting rates and stopped the bleeding. So European equities shot down by the Iran war. But the Ministry of Truth says party on. So, Fez back to positive for the year, and European financials, that full of companies that people think are bad, like Deutsche Bank, kicking the crud out of U.S. financials. Peripheral Europe fell harder, right? Just like small cap stocks, but now is bouncing higher. So Greece, Italy, Spain now doing better than Europe and the U.S. Goodness gracious, great balls of fire. Japanese debt and equity markets don't like bad leadership. Most people didn't have Japanese stocks as best performers. Look, we got this populist president in Japan. He made a very bold call, trillion here, trillion there. Pretty soon you're talking real money. Basically, the bond vigilantes said, man, we hate you. And they came after Takaichi, and they're not a fan of unfunded populist agendas. So the government bond yields went basically batshit crazy, which put a wrinkle in Ueda-san's plan for a stronger yen. And the yen, you can see on the left-hand side, started to weaken, and going up is a weaker yen. So the yen was tumbling, Japanese stocks were rising. But as soon as they announced peace, I'd say, Japanese yen can be stronger again, because a stronger yen usually means the carry trade is going back on because people are borrowing in yen and buying other assets. Japanese stocks don't like a stubborn yen, but they like peace more than they worry about the yen. So Japanese equities have gone vertical. Again, a lot of that is AI. There's a bunch of Japanese companies that provide crucial supplies to lithography makers and die makers and chip makers. And there's just a whole bunch of very esoteric Chinese or Japanese companies that no one thought about that have been around for hundreds of years, but they make certain chemicals that are necessary to make semiconductors. So you're still dangerous. Be my wingman anytime. Everyone hates China, but China is still playing a different game. They want to be the dominant superpower. So they are printing money like there is literally no tomorrow. Their trade surplus soared despite all the nonsense on tariffs. They're playing a different game. They're playing Go, which is about regional domination, not head-to-head combat. They're selling treasuries and buying gold. They get the game that the only way out of a $39 trillion debt hole in the US is to devalue the currency. So China said, hey, take back your bonds and we'll buy gold, and gold will be a better store of value. And then we'll make our currency convertible and we'll be the world reserve currency. That's next. Chinese equities hit by the conflict, big bounce on peace, the local shares up more. The China Tech, the terrific 10, they were punished more in the conflict, and now they're bouncing less. I just think this is, generally speaking, the propaganda against China has worked with global portfolio managers. There's a lot of people who just won't invest in China, so that's real. In case some of you are wondering who the best is, we still think it's Bitcoin. Bitcoin died again 4 times last year, up to 472 now. If you had put $100 in every time it was declared dead, you'd have $80 million. That's a pretty amazing story. I mean, it's crazy. Everyone focused on this Benner chart, but really meaning that 2026 may be the last good year, and then the markets are going to collapse for, probably 3 years. But it really is about follow the money. So we have 4.7 trillion of liquidity coming. That's 1.2 from tax refunds. Now, again, most of that has been offset by rising gas prices. 2.1 trillion of corporate dollar repatriation. That's coming. And then the bonus depreciation, accelerated depreciation. That's an accounting gimmick, but it does free up cash. Bitcoin, highly correlated with gold with a lag. It's all about M2. Bitcoin has never been this undervalued relative to gold. A lot of people, myself included, believe in the 4-year cycle that prices were going to go lower, and we're in winter now. I think that's clear. The 311 cycle appears in control, 3 years, 11 months. But there are signs, and we showed the graph on the left last time, that it looked like it made a durable double bottom. That's when you make a second bottom on lower volume. And now we're locked in this rising channel on the right, which is, looking pretty good. Surprising to most that Bitcoin has outperformed everything since bombs started dropping. Crypto broadly is going to benefit from a tokenization of real world assets. Figure, one of our favorite companies, very exciting about this. We were involved at the beginning, and they're still way above their IPO price. And some of the smartest investors in the world believe in this company. That's always fun. Ethereum is the preferred blockchain for RWA, yet ETH, the coin, is struggling. I think it's because of, the gas system, but generally speaking, it's the preferred chain. So it probably has a bright future long-term. Stablecoins are the rails of the machine economy. Look, agentic payments are real. They're going to happen a lot, and they're going to happen on chain. Coin and Circle, 2 of the biggest beneficiaries, both done well. And I think we'll continue to do well. Tether too, but you really can't own it unless you're related to Howard Lutnick. While the fuss about the Clarity Act, look, the banks don't like stablecoins because they like making $300 million a day collectively. $300 million a day because they don't pay their depositors and they collect interest from the Fed. So 100 plus crypto organizations have called for urgent action on the Clarity Bill. They want Congress to mark it up. They want the Senate to pass it. In its current form, if it passes, it's a disaster. If we get some changes, look, I don't think any of the regulation, Genius Act or Clarity Act, is going to be really good for crypto, but it'll be less bad if we can get some of the changes that Armstrong and others in this group have lobbied for. He's going vertical, so am I. Gold. The gold went vertical last year. Our 3,000 target was cute. History shows that this can go a long time, even though it was a super crowded trade. We thought coming into the year that gold had run hard, needed a pause that refreshes. It has paused. We didn't say it was necessarily going to go down a lot, but we didn't think it was going to go up anymore for a while. Silver was the worst since 1980. I mean, it had tripled off the lows last April. And it was up another 27% this year. It had to pause, and it's been worse. So I probably would steer clear of silver for a while. The gold miners, we like them better than gold itself. but they were super overbought. So yes, they've been volatile. Maybe they've caught their breath. They're not overbought anymore. They're not oversold like they were in April. I'm sorry, in March. In mid-March, they were super oversold when we talked about it last time. And they've rallied nicely, but I would dabble here, but I wouldn't get aggressive. U.S. dollar hegemony is anchored by oil and the petrodollar system. This is a really important point. There's a reason that we are attempting to become oil exporters and oil producers. We are trying to get back the dollars that the rest of the world is running away from. So if no one's going to buy our bonds, then we have to figure out how to do it. So you're seeing them tucked in all kinds of places. Hedge funds actually own $2 trillion worth of bonds now. I wonder how they got that done. You got all kinds of other countries. You got Tether, backing stable coins with them. So if we want the dollar to remain at the center of this triangle, then we need, petrodollars to exist. China has a different plan long term. That's why they price in renminbi and rubles. But this is a game that's going to go on for a very long time. All right. Around the World is on YouTube and Apple Podcasts. Hedged with a capital D on Apple Podcasts. Digital Currents on YouTube and Apple Podcasts and Spotify as well. I updated to the top 10 Bitcoin books. There are now a bunch of books about Bitcoin. We love the Bitcoin Standard, but there are a bunch of other interesting books. And Read, Write, Own is still a great book. So that is all I got. And I'm almost on time. Oh, I got 1 minute. And where's my Q&A panel? No questions. Come on, someone's got to have a question. So it appears everybody wants to go hang out in the spring weather. Oh, thoughts on tips. I've never been a fan of tips, and that's not really a good thing per se. I know plenty of people who have done well with them, Jeremy Grantham and Mel Faber out in California. I've always felt that government bonds were good for the government, but never really good for the consumer. So, I've never been a buyer of savings bonds. I'd rather just, do money market account. Never really owned a lot of treasuries. I always thought you got paid for taking corporate bond risk. And I think the same thing with tips. I think playing to hedge against inflation is pretty good. That's my answer to that. Pretty negative on stock valuations, continue to participate and promote private company investments. Oh, great. So the nice thing about private companies is you can get involved, particularly where we play in venture capital, is you can play at the innovation level and you can play at valuation levels that are quite attractive. For example, right? We don't play in OpenAI or Anthropic. Now, look, I don't think we messed up in OpenAI by skipping that one. I think that one's going to be a disaster. But we passed on Anthropic at 10 billion. Now it's 800 billion. So we feel dumb about that. But I just never thought the valuation was right. Now they've grown their revenue base to 30 billion, but 30 billion, 800 billion on 30 billion is still wrong. So private company valuations in many cases are not anywhere close to public market valuations. And we think we can make nice returns. And even within the stock market, overall valuations are horrible, but there are good value companies. I'm a value investor at heart, and I think there are lots of places to shop for value. I think some of the software companies are starting to look a little interesting. I haven't stepped up, but I've at least started looking at them. I think it's unlikely that most enterprises are going to replace their CRM system with something vibe coded by a 13-year-old kid in China. I just don't think that's going to happen. So, maybe the top companies like ServiceNow could have a future. Uh, I think there's lots of value in the commodity space still, particularly the producers. That's why I'd still like the gold miners. I, love the MLPs. So, I mean, there's always something to do. We'll see. But long answer, but I like the question. Getting rid of the Iran regime be good for the world? Everyone's entitled to their opinion. I probably don't agree with that, but we can agree to disagree. Does Naval's product launch signal the VC doesn't think they can bring many of these companies IPO? No, look, Naval's been trying to do this for a very long time, right? He was involved with AngelList, and he loves this idea of solo VCs, like he tried to do it with Pomp, and they got in a little trouble with some regulatory stuff. And he's trying to do it again. So the guy who's running this is a solo VC, and it's in the note that I showed. The guy's never actually exited, and Naval is lending his name to it, and he's advertising it. I think what it signals is the basic premise is good, that young people in particular, but older people too, should have allocation to venture capital and private equity and long-term assets. And up to this point, because of the SEC, which says if you're not rich, you're not smart, they've created a walled garden to keep non-accredited investors out of these investments. Well, that wasn't really a walled garden to keep the consumer safe. It was a walled garden to keep the rich rich, so only the rich could play. So I love the idea. I just think the implementation is backwards, right? If you think about venture capital, what you're supposed to be doing is investing early stage and taking the risk, and you'll have some zeros and you'll have some things that don't work out, but the ones that do work out will make up for it in spades. Buying the really late stage stuff at these crazy pre-IPO valuations, maybe it works out, but by the time you get out of lockup, in most cases, you don't make a lot of money. And I think in these cases, at these extreme valuations, I think you could lose a lot of money. So I disagree with the implementation. I wholeheartly agree with and endorse the idea. I would just rather see them do early stage investments, larger number of companies, stay away from the hot dots, and don't try to sell it based, like when my barber here in North Carolina last 3 weeks ago when I got my haircut says, what do you know about this SpaceX company? I'm like, oh my God, Russell, stop. Please run away. Whoever said you could buy it, just run away. When my barber's asking me about it, that's a bad sign. And he's a great guy. Don't get me wrong. It's just, he's not going to be early to that party because that's not his job. Not the first time Oracle does funny business with the numbers. Oh, Ken, I mean, this is, yeah. During the 90s, the stock did crash all the way to $3. You are absolutely correct, because they did. Yes. I mean, and again, I'm not casting aspersions on anybody. It's truth, right? Truth is an absolute defense. We're not saying that the leadership is bad just capriciously. We're saying this company has done bad things. This company has, been involved in other situations that didn't work out so well for investors. So I would stay away from this one personally, but if people want to trade it, so be it. But yeah, and yes, your comment on the supreme leader of that organization, I could tell you some stories. One of my best friends used to live not next door, like in a neighborhood, but their property abutted, and he was after my neighbor to buy his property for forever, and he finally did sell it to him for a crazy number. But there's some crazy stuff. So on that non sequitur, let's end it. I appreciate everybody's time and partnership and friendship, and enjoy the spring. And we'll be back in the near term, and hopefully we won't have to talk about war anymore. All right. Be well, everybody.